This is the briefing for Friday, August 5th. This market is just a very, very interesting market. I believe it is really unsure of whether value is higher or whether value is lower. And certainly as we look at what's happening from an internal perspective, that we can see that the market is not strengthening and it continues to weaken as opposed to strengthening, even though the price development is moving higher. And appears to want to move higher, but it appears to be going to be very difficult for that to continue. Now, today we had employment numbers out, and they certainly made a difference in what was happening, and we had a lot of volatility in the stock indices. This is a chart of the 2-year and the 10-year note yield, and you can see this is the 10-year here, and this is what happened today after the announcement of the employment numbers. So you can see they reached a point of being at 2.84, closing at 2.83, and the 2-year at 3.244. So that basically is an inverted yield curve and does suggest that we potentially are headed into a recession. Stocks, on the other hand, really didn't know how to deal with that. You can see that we opened today here and actually moved back up to the upside. We gapped down, moved up, then we retraced that whole move and then spent the rest of the day retracing it once again. So it was a day of really volatile price movement, just a lot of back and forth. Now, when you step back and you look at what's occurring on a little bit longer term basis, we basically have another area of pause or rotation going all the way back to the end of July, and with a shorter term pause right up through here, right at the extreme. Now, we'll see in a minute that the 410 to the 420 area is a very important area in the spiders. In the Qs, we have basically the same thing. We have an area of pause, vertical development, then an area of pause and retesting this breakout point. But I think the most important thing to this is what's happening with market breadth and volume. You can see that market breadth was declining right through here. We had one day of an elimination of that divergence. Then we went right back to it again. Then we had another day of almost eliminating this divergence, and then right back to the deterioration in market breadth. Now, this is the number of shares trading higher minus the number of shares trading lower. So, while the indices are weighted, it is virtually impossible, even though the higher weighted stocks may be trading up, it's impossible for them to carry the rest of the market when you see a continuation of deterioration. Even the lower weighted stocks will begin to weigh on the higher weighted stocks, and we'll see some type of rotation back to the downside, unless or until we see the internals, or especially market breadth, begin to improve and begin to support price. Now, that typically will happen around a news event. And, right now, unless we see something else coming up for next week, there really is not a substantial news event facing us. So it's going to be interesting to see how traders resolve this situation with the divergence in market breadth as it is. I want to look at volume, and you can see volume. This is total volume on the NYSE. You can see how it is continuing to deteriorate. This is total volume on the NASDAQ. It is continuing to deteriorate as well. We did have a spike up on the 3rd. And I'm not sure what that was, but you can see how we came back down on the 5th. So we are not attracting new buyers to this market. In fact, it appears that there is a small group of buyers that are really spurring this rally, but then there's just no selling pressure. So unless or until we see some selling pressure, we may just be in for a little bit of a volatile session, maybe in for to seeing some continuation of rotation, which is what we've seen here. So you can see the rotation that occurred for the last 6 days right here. Now, this 410 area in the spiders is important, going up to about the 420 area. And you can see that if you look back here, you can see the rotational pattern that occurred. Now, if we trade much above 420, then that's going to open up the next level of resistance at 460. If that's the case, then that would suggest the potential that the market is going to test the all-time highs. Is that going to happen? I think that's a low probability based on what's happening with market breadth. You can see that here. And this is volume on the spiders, and you can see how it is even declining as well. Looking at the NASDAQ, well, before we go to the NASDAQ, I should say that this 410 area is really important. Now, if we trade much below it, that's going to open up rotation back down to test the 390 area, which was the breakout, retest, and then a rally back up to this 410 area. So watch what happens with this area here, the highs and lows for the last 6 days of trading, really important for the spiders. Breaking that's going to open up 420. Breaking 420 is going to, that's really going to open up the potential for a substantial rally to 460. Breaking below 410 is going to suggest a rotation back down to test the 390 area. And it's just really important what's happening here with market breadth. And you can see it was even negative in today's trading. Looking at the NASDAQ had 3 days of rotation just below this 319, 320 area. Then 3 days of rotation at and just above it. Same as the spiders. This is really important. Volume falling off, breadth falling off in the NASDAQ. Trading below 320, I would say really down to about 320, down to about the 315 area would suggest then we're going to see rotation back down to test the 300 area. Trading much above the 324, the high of yesterday, would suggest the next level of resistance comes in right around the 370 area. That could be a substantial move. Looking at where we are with the Russell, you see the Russell rotating 6 days just below this 190 area. So we do have a little bit of intermarket divergences as you can see. Trading above 190 is going to open up trading up to about the 207, 208 area. And then, of course, trading much below the 184 area is going to open up trading back down to the 178 area. Volume in the Russell falling off pretty dramatically. This is NYSE breadth, and you can see that is continuing to fall off as well. This happens to be total new highs minus new lows in the NYSE, and you can see that that's negative also. So really not any strength coming into the market. Unfortunately, we are at a point of being neutral in terms of overbought and oversold. So it really does not suggest a potential move in either direction. And that basically has to do with the fact that breadth was basically negative, and the market is just really not at a point of being neither overbought nor oversold. Now, I do want to point out, this is the NYSE net volume, and you can see the trend of net volume. It's up volume minus down volume. You can see the trend in that is down, meaning with each passing day there was more down volume as opposed to up volume. So where we are, really, we're at a point of inflection. I think this is just an extremely important area right through here in the spiders and in the NASDAQ, or in the Qs, I should say. If we trade much above these highs, then that's going to open up, I think, another potential for a substantial rally. Trading below these lows is going to open up rotation back down to test support levels that are extremely important. Really surprising today, once again, to see the market hold up the way it did with interest rates skyrocketing the way they did in today's trading. So going to be an interesting week coming up next week. Have a great weekend. I'll pick this back up on Monday.